one thing that's really exciting about the apartment business is that we are continuing to use technology and process to improve service for the resident, improve the employee experience, and keep costs down. In this inflationary climate, our company has had 5 years where we've averaged 3.3% expense growth, which is great, about 1 whole percentage point better than our competitors. So we're really good at managing expenses at Equity, and that's been about technology and about process improvements.
I'm here today with Mark Parrell, President and CEO of Equity Residential. What would you point to as some of the key achievements for Equity Residential during 2023?
Well, one of the things I would just say off the top is I am so proud of the team. I mean, it was such, I would say, an exciting year, but such a challenging year just because of all the volatility in the market, and the team performed well. I mean, we will have this year 7+% FFO growth, which is our cash flow measure, which is terrific, on top of a double-digit cash flow growth number last year. We raised the dividend 6%, so we feel like we really rewarded the shareholders. We're 96% occupied. We got a very affluent renter base in our apartments, which are mostly on the coasts and a little bit in the center. And so we're rolling into a year in 24 where we do feel like, and we've all, really everyone you talk to in the economics world, would say less job growth and all, but we're very well occupied, not too much supply. So we feel really well positioned going into next year. So again, I think it was an exciting year. I think we performed well for the shareholders, and I feel like we're positioned to do the same again.
And as you meet with investors this week, are there particular questions or topics that are coming up more frequently than others? And if so, how are you responding to them?
We've had a lot of great conversations about Seattle and San Francisco. So about 26% or so of our NOI comes from those markets. We're pretty diversified between city and suburbs for our apartments, but we do have concentrations in the urban centers of both. And so the question is, when do those fully recover? Because though we're well occupied, rents haven't moved much, and they're still below 2019 levels by and large. And I would tell you, we're really excited about the improvement in the quality of life in these cities. I mean, there's been changes in the political situation in both cities. There was an election last week in Seattle that we think went well for the people of Seattle and went well for a better quality of life on the ground. So we're excited about that. But the big thing is job growth. These tech giants, the AI businesses they're building out, we're excited about. We have a big presence in Redmond, Washington. That's where the AI operations of Microsoft sit. Big presence in downtown San Francisco, a lot of AI activity there. You've read about the leasing activity in the office space there for AI, so we should benefit from that. So I feel like we're spring-loaded in those two markets where we just haven't gotten the full recovery yet and hope to deliver it. So we've had a lot of conversations. I would say our shareholders are impatient as we are to see that recovery manifest itself, and it may take a few more quarters, but we do see, just this sight line to improvement.
And what are some initiatives underway at Equity Residential that you are most excited about for the year ahead?
So one thing that's really exciting about the apartment business is that we are continuing to use technology and process to improve service for the resident, improve the employee experience, and keep costs down. In this inflationary climate, our company has had 5 years where we've averaged 3.3% expense growth, which is great, about 1 whole percentage point better than our competitors. So we're really good at managing expenses at Equity, and that's been about technology and about process improvements. So just ways to run your properties better, both on the sales side and the service or maintenance side. What I'm excited about the next, and we've garnered probably around $35 million in NOI over the last couple of years just doing that, but mostly expense savings. Turning the page to 24, we're talking more about revenue enhancement. Ways to improve connectivity in our buildings, ways to use shorter term leases in some cases where you may have opportunities. I mean, there's really good stuff that we can do that our residents want to pay for and that we think will garner somewhere around $20 to $30 million of additional NOI over the next couple of years. So we're excited about that. And also on the investment side, again, capital allocation, most important thing we do. We do a lot of renovation. We've been renovating about 2,500 units a year, spending on each unit around $30,000. That's about $75 million. Getting good high single-digit cash-on-cash returns. We'll do more of that next year. We've got solar projects in the queue we're excited about. And again, digital locks that you see like in hotels, that's come to our industry. We continue that install. There's other things like that that again help with the beginning of the conversation we just had, expense management, revenue improvement. So we're really excited about the technology and investing capital in the portfolio to kind of move forward.